The Newsday continues here on One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. Inflation dropped to 4.9% in October as lower prices of food contributed to downward price pressures. The latest figure reported by the Philippine Statistics Authority is much lower than the 6.1% recorded last September. The October inflation is much lower than analysts' expectation of 5.7%, the median estimate, according to a Business World poll. It likewise fell below the 5.1 to 5.9% forecast of the BSP for the month. Average inflation from January to October, meanwhile, stands at 6.4%, still far from the government's target band of 2% to 4%. The central bank said Filipino consumers saw lower prices of rice, meat, and vegetables in October. The BSP, however, said upward price pressures might come from price hikes in electricity, LPG, fruits, and fish, as well as the recent adjustment in jeepney fares. Finance Secretary Benjamin Diokno says the Monetary Board will likely pause at its November 16 meeting as policy rates have, quote, reached the highest level. The BSP is scheduled to have its second to the last rate-setting meeting on Thursday next week. Last month, the Monetary Board raised borrowing costs by 25 basis points in an off-cycle move, bringing the benchmark interest rate to a 16-year high of 6.5%. But according to Diokno, the current policy rate is already the maximum. Meanwhile, BSP Governor Eli Remolona Jr. said the country's financial system exhibited sustained resilience and supported economic activity in the first half of 2023. Based on the report on the Philippine financial system for the first semester, Remolona said the banking sector still dominated the financial system. In fact, banks' assets increased by 9.1% to 23.3 trillion pesos in end June this year from a year ago. This was also faster than the 7.8% increase recorded last year. Here to give us his insights on the latest economic headlines, we have with us on the program RCBC Chief Economist and Head of Research, Mike Ricafort. Good morning, sir. Thank you very much for joining us again.
Hi, good morning, Diego, and to your viewers.
Okay, sir. First of all, inflation is at 4.9%. Now, was this expected?
Well, this is somewhat slower than what the markets expected. At least 5% from 6.1%. So, I think practically, almost all of those polled didn't get that figure below 5%. But nonetheless, it's a pleasant surprise because we have seen, generally, this is largely brought about by better weather conditions. Especially the impact on food prices, especially agricultural products like vegetables, rice, because we didn't see storm damage in October as against large storm damage in the latter part of July till early September.
That's right.
So during that time, up to early July, there was some spike in food and especially vegetable prices and other produce. That's always expected whenever there are large storms. So now we have seen, because why is that? With better weather conditions, we have seen, of course, more output, more supply from agricultural products, and some easing in prices with increased supply. And food accounts for nearly, about a third of the inflation basket. That's why it's very significant. And rice alone accounts for nearly 9% of the inflation basket. And we have seen already the price ceilings on rice already scrapped. It was just it was just temporarily in place from September 5 to October 4. Precisely because we have already seen the early harvest season since mid-September and well into October that increased the supply of palay and rice, and some easing of local rice prices as part of the justifications for lifting the said price ceiling. And not just locally, we have seen also some easing in world rice or Thai rice benchmarks.
Yes.
After reaching a high 15-year high last August, we have seen it
Mhm.
steadily or gradually easing in September and into October as well. So those are the main contributors, and the fact also that the peso exchange rate already improved,
Okay.
especially of late. Um, we have seen a stronger peso, the strongest in more than 3 months. That will lead to lower import prices eventually, and some semblance of stability for most of October, as it has been capped towards. Well, it didn't breach the 57 level still,
That's right. That's right.
and now, despite despite the effects of the Israel Hamas war, uh, well, we have seen also global oil prices already easing or going down. In fact, recently, since late last week,
Mhm.
they already went down to new 3-month lows. The Nimex oil is now doing at a little over $80 per barrel. When
Okay.
right before the war, it was $82. It's now lower by $2, and from it reached as high as ninety
Yes, sir.
dollars
But sir,
just a few
my
days
question
ago.
is, sir,
Yeah,
sorry,
go
no.
ahead.
My question, sir, is sorry. We're at the tail end now of the year, October, November, November, December. Now, will the expected holiday spending push inflation further in the last 2 months? Now, what is your outlook, sir, inflation outlook for the full year of 2023?
But for 2023, well, it's still somewhere between 6 to 6.5%.
Okay.
Yeah, that's still, well, now the latest is 6.4%. It may be veering towards a little over 6% for the full year. So it's still kind of elevated. But however, come get through. That's a very good point, Chego.
Mhm.
Come the holiday season, the seasonal increase in demand would lead to some seasonal uptick in prices of Noche Buena items,
Okay.
especially
Okay.
those that are purchased by the typical family for the holiday celebrations, like the likes of meat products and so on and so forth. But only to go down
Okay.
after the holiday season upon crossing the New Year.
So
So it's
after,
something that's
okay.
temporary, but that would also still impact on prices. Still, when it comes to, but that this would be felt more
Mhm.
by households and families with limited budget. But if you look at the headline inflation, how do we see it going forward? It may still ease a bit from the current 4.9. It may hover towards a little over 4% by November and December, provided that there won't be any huge storms anymore, and provided that the geopolitical picture remains relatively stable. There won't, well, provided there won't be any escalation or a
Okay.
wider or a broader war. So yeah, that is still achievable, and that's already moving closer to the
That
BSP's
that
inflation
sounds good,
target of.
sir. So you're saying if everything holds through, likely we're seeing 4 point, at least 4%. But sir, let's move right now to the GDP. Business World Poll says GDP grew to 4.9% in the third quarter. Now, what are your projections?
Well, at around 6% is still possible, Diego,
It is. Okay.
because of the base effects. Because what happened, the second quarter, we saw a slowdown,
Mm-hmm.
4.3%, because of two things. We have seen that reflects largely the huge denominator the year before, second quarter of last year, when there was massive election-related spending during the local and the national elections, presidential elections, and that. We don't
Mm-hmm.
have that this year.
Yes, that's
That's
right.
why suddenly the growth decelerated. Uh,
Mm-hmm.
and secondly, we have seen also the impact of higher prices and inflation, as well as the adverse impact of higher interest rates and financing costs that drag also spending by consumers. Consumer
Mhm.
spending accounts for nearly 70% of the economy, as well as spending by businesses, industries, government, and other institutions. That's why
Okay.
we have seen also the government, some underspending, especially on infrastructure. But now, prospectively, things would get better. We just have just for the past week or two, and maybe for most of October, we have seen preparations for election-related spending during the
Yes, yes.
barangay and SK elections. So that would be a boost.
Yes.
And of course, the increased government spending as has been
Mhm.
acknowledged, the need to speed up again in the second half of the year. That would be another source of growth for the rest of the year. And also, the reopening narrative. Everything is, no more restrictions and, at least the continued recovery of both local and foreign
Yes, that's right.
tourism. And that would have a positive impact also on many other businesses and industries, as well as preparations for the new school year opening,
Mhm.
among other things. We have seen employment data that, some indicators that would suggest a better third quarter or even fourth quarter data. uh, the strongest employment data in terms of the lowest unemployment rate since the start of the pandemic, and also among the best levels for both employment and unemployment in about 18 years, or since 2005. So that would really augur well when it comes to how, the likely uh, year-on-year pickup in GDP growth by the third quarter and also into the
In
fourth
the for
quarter. Yeah,
that would
the only
yeah.
drag is just, would be still relatively higher prices or inflation, and of course the higher interest rates that are a drag when it comes to new investments, and new credit
Mhm.
financed by new loans or credit that would have otherwise added to economic activity. So it's still promising though. External environment, it's kind of mixed.
Yes, yes.
Because there's still some pockets of softness in the U.S. economic data.
Mhm.
That's also the result of the unintended consequence of the rate hikes, aggressive rate hikes since last year, in an effort to really, uh, that's the unintended consequence to deliberately slow down the
Mhm.
economy in
Yes.
an effort to slow down demand and temper and better control inflation, price stability mandate of the central bank. So yeah, that's the policy consequence, one of the drags also that
Well,
we have all to contend around the world.
it will definitely keep a watch on all of this. Again, sir, thank you very much for your insights. Unfortunately, that's all the time we have for now. Thank you for joining us, RCBC Chief Economist and Head of Research, Mike Ricafort. Good morning.
Yeah. Thank you so much, Diego, and to your viewers. Good morning to everyone.
We'll be back with more stories after the break. Keep it here on the One News. You're still watching One News Now. I'm Diego Castro. The implementing rules and regulations of the Maharlika Investment Fund have finally been ironed out. President Bongbong Marcos confirmed on social media that they have finished finalizing the IRR of the country's first sovereign investment fund. The president says they will get the MAF up and running as soon as they establish the corporate structure. Malacanang, however, did not elaborate what changes were made to the MIF's rules. Recall that Marcos Jr. initially suspended the implementation of the IRR, citing the need for further study. The Office of the Executive Secretary explains that the President suspended the implementation to make sure there will be safeguards in place for transparency and accountability. The suspension also came after Land Bank and the Development Bank of the Philippines sought regulatory relief after remitting their seed money contributions for the MIF. The Philippine peso strengthens further, breaching the 55 level against the US dollar. The Philippine peso closed at 55.91 against the greenback yesterday, November 6. The local currency gained 19 centavos from the 56.1 closing level last Friday. RCBC Chief Economist Mike Ricafort expects the peso to hover around the same level this week. He attributes this to the long holiday weekend, as well as anticipation of upcoming remittances for the holidays. For 2023, the BMI Country Risk and Industry Research expects the peso to strengthen slightly to 55.6 against the dollar. That's after the peso emerged as the worst performing currency in the region, shedding 9.33% to 55.755 in 2022. However, the same group also projects the peso to slide in 2024 and warns that import-reliant Manila may have to shell out more to meet local demand. Now here's a rundown of the biggest corporate headlines this morning. Meralco registered a third quarter net income of 10.55 billion pesos, a 58.9% increase from the same period a year ago. The positive results largely came from several income contributions, such as Pacific Light Power Singapore, the San Buenaventura Power's coal plant, as well as the Global Business Power Corporation thermal plants and MGen Renewable Energy. The Transportation Department says Turkish airport operator Limak Group has joined 7 other entities that have bought bidding documents for a project that will upgrade the Ninoy Aquino International Airport. The DOTR has set a deadline for bid submission on December 27. The agency is expected to announce the winning bidder by the first quarter of 2024. SM Prime Holdings Incorporated posted a 35% increase in its consolidated net income on the back of higher revenues. SM Prime said its consolidated net income for the July to September period rose to 10.7 billion pesos from 7.9 billion pesos last year. The company's third quarter consolidated revenues also increased 20%, while its consolidated operating income climbed by 17%. And those are the top business stories of the hour. I am Diego Castro. Join us again at 2 p.m. We are One News. All sides, all the time.